Welcome to all. I am Dr. K. Gunasundari from E-commerce department. Today's topic is income from house property. In this, the second head of income chargeable to tax given in the section 22 to 27 of the Income Tax Act. The income from houses, buildings, bungalows, godowns, etc. to be computed assessed to tax under the head income from house property. Next, definition of the head. The income from houses, building, bungalows, godowns, etc. to be computed and assessed to tax under the head income from house property. The income under this head is not based upon the actual income from the property, but upon notional income or the annual value of that building. House property income equal to annual value of building minus specified deductions allowed under section 24. Next, terms used in house property. First, we see about actual rent. Actual rent is nothing but it is the rent actually received by the owner. Next, composite rent. Composite rent refers to the total amount received by the owner from the tenant, including services provided by the owner. We explain in detail. In actual rent, rent of the building, plant and machinery, furniture, etc. And rent is separable. Actual rent is reduced by the amount of rent of plant and machinery, furniture, etc. Balance is actual rent of house property. Any amount of local taxes paid by the tenant, cost of repairs borne by the tenant, or any interest on advance deposit are not to be added. Next, we see about fair rental value. Fair rental value means shortly called FRV. It is based on the rent prevailing for similar type of accommodation in same or similar type of locality. It is based on the principle that rent prevailing in same locality for similar sized property is almost the same. Such rental value is called fair rental value. Next, we see about municipal rental value. In this rent fixed by the municipality for the purpose of levying local taxes, the local authority, that is municipal corporation or committee, etc., conducts a periodical survey of the house properties in their local limits. On the basis of such surveys, the rental values are fixed, which serves as the basis for levying tax by municipal corporation and other local bodies. The rental value so fixed is called municipal rental value. Next, standard rent. Standard rent, the fixed by the Standard Rent Control Act is called standard rent, wheresoever applicable is called standard rent. Next, unrealized rent. Unrealized rent refers to the rent not to be received by the owner from his tenant. Unrealized rent can be deducted from annual rental value. Next, vacancy period. Vacancy period refers to the tenant for the period during which let out property has remained vacant in the previous year. Next, gross annual value. Gross annual value refers to the value which the owner receives before allowing any deductions. Next, we see about net annual value. It is the amount available after deducting municipal tax or local tax paid by the owner from the annual value. Next, municipal taxes. First we see about municipal rental value. In this topic we have see about municipal tax. So both are different. So municipal tax can be deducted from gross annual value only if it is paid by the owner during the previous year. Next we see about exempted income from house property. So in this tax authority we have certain incomes are exempted from house properties. So what are the exempted income? We have see one by one. Under this section 10 of the Income Tax Act 1961, following income from the house property are exempted from the tax. These incomes are not to be included in the total income of assessee. Hence, no tax is payable on such incomes. Those incomes are: first one, agricultural house property, section 2, of income tax, income from such house property which is situated on or in the immediate vicinity of agricultural land which is used for agriculture purpose by cultivator is exempted from tax. So agriculture income from house property, it is a fully exempted tax. Next, second one is house property held for charitable purposes, section 11. Any income from a house property held for charitable or religious purposes, example, rent from shops owned by a temple, is also exempted. Next heading, self-occupied but vacant house. Under the section 23 subsection 3, in case an assessee keeps on his own house reserved for self-occupation but is living in a rental house elsewhere due to his employment or profession, the income from such house is taken to be a nil. Next, fourth one, house used for own business or profession, section 22. There is no income chargeable to tax under this head from such a house property. Fifth heading is property held by registered trade union, section 10 subsection 24. Income from a house property owned by a registered trade union is not to be included in the gross total income. Next, income from house property held by following shall be also exempted: house property held by a local authority, and house property held by a scientific research institution, house property held at a political party, house property held by a university and any other educational institution working for spreading education and not to earn profit, house property held by a hospital or medical institutions working for a spreading of medical services to the people are not meant for earning profit. So these are also a exempted income, and other exempted income is also there. One is one house property owned by a former ruler of Indian states and two self-occupied houses. Another one is house property held as a stock in trade and not let out during the previous year. So these are the exemption from house property incomes. Next, we see about types of house property. In this types of house property, first one is a let out house, second one is a self-occupied house, third one deemed to be let out house, fourth one is partly let out and partly self-occupied house. So first we see about let out house. The format for computing taxable income from house property in let out property. So first we have calculate gross annual value. In this gross annual value, we have deduct municipal taxes paid by the owner. We have deduct this amount, we have get net annual value. Next, we have net annual value. We deduct the following deductions under section 24. First one is a standard deduction, 30% of net annual value. Next one is a interest on borrowed capital, that is previous year interest plus pre-completion period interest. So we have add those interest and also deduct the under section 24. We have get income from house property or loss from house property. Then we have add unrealized rent recovered and add arrears of rent recovered. In those amount is available, we have add. We have not in available, so we have not taken into the account. So finally we have get taxable income from house property. So first, next we have see about let out house, self-occupied house. So format for computing taxable income from self-occupied house is gross annual value automatically nil because we have any rent received by the tenant. So gross annual value is nil. So only deductions we have taken. So less deduction under section 24. We have any interest we have paid to the loan. So we have taken as a interest on borrowed capital or a maximum limit whichever is less we have taken. So automatically self-occupied house, loss from self-occupied house property we have get.